Hello, today we are solving May 2019 paper Unit 1 question number 2. Samantha is in the business of buying and selling goods on credit. The following balances were available as on for the month ended 30th April 2019. So the first part of the question, it says that part A, prepare the trial balance at 30th April 2019 including the calculation of the capital. So for preparation of the trial balance, okay, you should know this, that any debit, for in the debit side expenses, assets and drawings will occur, and on the credit side liability, income and capital. So the easy way to remember this is the concept of dead, and this is called as click. So this is click. Okay, now let's put each of them. First one is a revenue. Revenue is an income. Okay, so revenue is money coming into the business, so it is income, so you will put it on the credit side. Okay, then you have the purchases. Purchases is like an expense. Okay, purchase is money going out of the business, so you will put it on the debit side. Then return inwards. Return inwards is nothing but the sales return. Okay, sales return is called as return inwards, and return outwards is purchases return. Okay, purchases return, and we can see that return inwards of 450, that is sales return. Okay, income has been reduced, it's like an expense. Okay, it is like an expense, so or you can put it in the opposite side of the income. Okay, because it has been returned, sales income reduced, income has been reduced less the income. Then purchases return, this is expense has reduced, so which means I will put it on the income side. Okay, on the income side or the credit side. Then discount allowed. Okay, discount allowed is like an expense, okay, to the business. You allowed some discount to the customers. Okay, you allowed the discount to the customers, so it's like an expense to the business, so it is going to appear on the debit side. Then bad debt. Bad debt is also an expense to the business. Okay, so it is going to appear on the debit side. Then bad debt recovered. Bad debt recovered becomes an income, it's money coming into the business, so it is like an income, so it's going to appear on the credit side. Then general expenses are expenses, so it is money going out of the business, so it is going to appear on the debit side. Then you have the inventory. Inventory of 600, it is an asset. We generally put the inventory under asset, so assets are going to appear on the debit side. Okay, then trade receivables. Trade receivables are also assets. Okay, current asset, so I am going to put it on the debit side. Then allowance for irrecoverable debt, any trade receivable less allowance for irrecoverable debts you will do, so it's a provision, you will put it on the opposite side. It's in like an expense to the business which you are providing. Okay, which you are accounting. Then trade payables. Trade payables is like a liability, you have to pay it. Okay, so that is like it is going to appear on the debit, on the credit side, so 1900. Then bank overdraft is also a liability to the business. Okay, it is a liability, current liability to the business, so it is going to appear on the credit side. Then you have non-current asset at cost, it's an asset. Non-current asset at cost is an asset, so it is going to appear on the debit side. Then you are going to have less the provision for this non-current asset, it's an expense to the business. Okay, so I am going to put on the credit side. It's like it is an expense to the, you are providing the provision, okay, for these non-current assets. You will generally do less assets, okay, less the cost to get the carrying value. It's like a, you will have to put it as a, it is the less the non-current asset, so you will put on the opposite side. It's not an expense, but here provision for non-current assets depreciation, it you are going to less any cost of assets, so you are going to put it just on the opposite side. Then drawings appear on the debit side, so 550 drawings, it's going to appear on the debit side. Now we have to calculate the capital, okay, the capital which is going to appear on the credit side, okay, as we have seen. So let's add up everything here, and the balance must be equal on both the sides for the trial balance, okay. For the trial balance, okay, we have to add up on both the debit and the credit side. So here let's add up. So 2700 plus 450 plus, okay, plus 120 plus 50 plus 1250 plus 600 plus 2990 plus 4100 plus 550. So that is going to be equal to 12,180. So this will be the same on this side also, it should be the same, okay. So the remaining is going to appear as capital on the credit side. So let's add up these values, okay, the values from here, okay, till here. So let's add up these, whatever is there, it is 5000, okay. So it is 5000 plus 210, 5000 plus 210 plus 200, okay, 200 plus 300 plus 1900 plus 730 plus 3000. So that value is 11,340. Now minus 12,810, 12,810 minus 11,340. So that is 1,470, okay, 1,470 becomes the capital, okay. So 1,470 must be the remaining, so that the trial balance is balanced. It should have been the capital.